In today's video, I am introducing you to a US-based stock on the OTC. I'm excited. Why am I excited? Because I don't normally make a lot of videos on US stocks. I find them generally too volatile, too many day traders, overpriced a lot because there's more investors looking to find and buy these stocks. So typically I avoid the US. So if I am excited about this video, this has to be something special. To my regular Canadian audience, I am comparing this stock to California Nanotechnologies, which is up 276% in the year. And that's what I'm trying to do. For any new US viewers, I am not a day trading channel. I am looking to find good stocks, buy good stocks, and keep good stocks. And today, I'm hoping I found another good stock, SCI Engineered Materials Inc., tomorrow's tech solutions today. My name is Cameron. You're watching Common Sense Investing. Let's go find a great penny stock. This is a weird place to start one of my videos. Their annual meeting of shareholders held June 8, 2023. Why am I starting here? Because I don't normally see an investor presentation that starts with the numbers. Usually I see them with products and excitement and hype and why invest in us. This company chose to market itself with their numbers, and the numbers look good. We're looking at a 75% increase in revenue, 36% increase in gross profit, over a 32% increase in operating expenses, which increased their fully diluted earnings, that's right, earnings per share, from 0.37 in 2021 to 0.43 in 2022. How are they making 43 cents earnings per share, you ask? Well, with chillers and bonding tables and grinders, of course, because I completely know what this stuff is. Okay, look, usually I'd like to invest in a company that I understand. I like to invest in a company that builds houses or installs bridges. That's easy. I get it. It's easy to analyze. That is not this company. They do advanced products and services, including advanced materials, diffusion bonding, vacuum hot pressing, indium bonding. I don't know what indium bonding is, but as an investor, I do know what these numbers mean, right? That's what I'm interested in. So look, I'm not too embarrassed to sometimes admit I use ChatGPT to help me research a stock. I went to ChatGPT here to ask, what is sputtering targets? That is one of their products. Sputtering targets are materials used in the sputtering process, a core technique in physical vapor deposition, PVD, which is widely employed in the manufacturing of thin films and coatings. Okay, that's not helping, but let's continue down here at the bottom. This process is critical in numerous applications across different industries, including the manufacture of semiconductor devices, data storage media, solar panels, flat panel displays, and decorative coatings, among others. The precise control over the film's composition, thickness, and physical properties makes sputtering an essential technique in the fabrication of electronics and other high-tech products. That is exciting. That I can understand. Some red here on the charts. They've had some difficulties, up 34% on the year, down 4% in the month. Let's go look at these numbers and figure out what's making share price volatile. Assets. Remember I showed you those 2022 numbers earlier? $3.9 million in cash, $11.8 million in assets back in 2022. 2023 has come in. $5.6 million in cash. Cash is up significantly. Assets are up significantly, $17.4 million. What is up? Cash, inventories, and prepaid purchase orders, all driving assets in a good direction. Liabilities also up from $11.8 million to $17.4 million. Actual total current liabilities up from $2.9 to $5.9 million. So they're up $3 million. Why? Customer deposits are up from $1.8 to $4.8 million. So the entire reason that liabilities are up, current liabilities are up, customer deposits, people are paying early for some of these products, that is up massively. It's not a bad liability to have. This is looking absolutely beautiful. I mean, here, revenue is up, great. Gross profit is up, great. Net income is up, fantastic. Now, remember back in 2021, earnings per share, what was it? 37 cents per share. In 2022, it hit 43 cents per share. In 2023, they have 48 cents per share earnings per diluted share. Everything's going in the right direction. You know what isn't moving? Look at the shares outstanding. There's been almost no share dilution. Cash is king, the all-important cash. Net income, of course, increasing from 2022 to 2023. It's now $2.1 million. Net cash provided by operating activities, $2.2 million. At the end of the day, net increase in cash was $1.7 million, up from a 2022 number that was negative. So look, all those fantastic numbers that I showed you, market cap of 23 million, enterprise value of 17 million, that's on almost 28 million trailing 12-month revenue, $6 revenue per share with 20% growth. They have cash, they have almost no debt. These are just some basic Yahoo Finance numbers that look great. Implied shares outstanding, 4.5 million, and a float, a very, very, very low float of only 2.3 million. So you think that a stock growing this fast with a nice balance sheet would be overvalued, fairly valued. Well, for this company, for this stock, I think I'm creating a new statement, and it's called priced for success. I'm tired of always saying undervalued, overvalued, because that implies value. There's always a value trap. What I'm saying for priced for success is that there is definitely some room for some margin expansion here. We're getting a price to sale of 0.89, EV over EBITDA of 5.76. This is on top of 48 cents per share earnings, right? Quarterly earnings growth of 21%. Price for success. That's all I could say. Now, do not forget that none of this is financial advice. The intention of my channel is to educate, but also to connect a good company, hopefully a good stock, with good people, hopefully good investors, so you can continue to do your own research and due diligence and decide on your own whether or not you're interested in this company or stock. Thank you very much. Because I have to get into some opinions here, right? I'm always looking, all investors, all microcap investors are looking for that perfect stock that has both growth and is profitable. Is that SCI Advanced Materials? Well, this is a very niche market, and they're buying very niche equipment to operate and grow revenue in that market. So they bought this new vacuum hot press installed in the third quarter of 2022. Obviously, that was a smart decision as their numbers improved in 2023. So we can look back at the history of them purchasing equipment and saying that was a good decision. They're also investing some money into R&D. This is a growing technology, a growing market that they're trying to grow into. To do that and to take advantage, they're going to need the best equipment at scale to continue their growth. That's what they're doing here as they're investing in the development of new applications, which include, there's a list here for you. That's enough information for a starting video. For an introductory video, I feel like that's what we need to know. What is my opinion here? What are the risks of investing in SCI Advanced Materials? What are the rewards of investing in the stock? Let's start with the risks. And risk number one for me is this is a very complicated company. I normally like investing in simple. So Advanced Materials, obviously, I'm not going to understand everything that they do here. There could be unknown risks that I'm aware of. So yes, basically risk one and risk two of this stock are I'm too stupid to understand what they make. Right? So after this introductory video, I'm going to have to continue to do my research. And I hope you do too, because where we found this company and where I am going to continue to do my research on SCI Advanced Materials is on my paid Patreon. I will put a link down below in the pinned comment. But if we can get over those first two risks and say, okay, we need to go do some more research. The third and final risk here for me is it's a volatile OTC stock. I would prefer if it was NASDAQ, New York Stock Exchange, something like that. But it is on the OTC. Nothing I can do about that right now. But if we can get over those risks, what are the rewards? The financial foundations of this stock are phenomenal, right? Good balance sheet, good growth, top and bottom line growth, good share structure, priced for success. Remember that, right? There could be multiple expansion and it's undiscovered. I think their YouTube channel has 8 followers. I think Twitter, they have 60. Nobody really knows about this company yet. To get that on an OTC stock, I like it. And I know somebody is going to complain. There's not a lot of volume. It's hard to buy this stock, right? It's true. There's not a lot of volume. But do not forget, this is a microcap investor's superpower. If we're looking to get into these good companies, not as a trader, but as an investor with the intention of holding for a longer term, Low volume is helpful to us because we get in at the price that we want. Not hedge funds, not institutional investors, not day traders. There isn't enough volume. This is our time. So if you're a microcap investor, there is no complaining about low volume on my channel. That's my rant for the day. Thank you so much for watching. Let me know what you think of this company, the stock, down below in the comments. I cannot wait to hear from you. You have been watching Common Sense Investing. My name is Cameron. Thanks for your time.